What's up, everybody? Welcome back to Trading Wars. So today I'm going to be continuing my beginner series guide. And today we're going to be looking at my day trading playbook. What are the types of strategies that I employ each and every day when I come to the market, and how do I get a statistical advantage? Okay, so the first thing that we're going to look at are the three types of days that occur in the stock market. So no matter what happens each day, we can separate the day into these three categories: an inside day, a gap up, or a gap down. So let's start off with the inside day. So what is an inside day? So an inside day is when we open within the previous day's high and low. And the characteristics of an inside day are that we will be very choppy because we are trapped within the range of the previous day and no one in the market has control. So the buyers and the sellers are both struggling and fighting to take advantage in their direction. So let's look at an example. So if we look at the beginning of this week, which was the 22nd of June, we were inside of the 19th range when we opened. So this candle right here. So we have the high and the low of the 19th, which was the Friday. And then Monday, we had this first candle, which opened within this range. Okay. So, and I'm going to continue now talking about the strategies. So whenever we open in the range of a previous day, there are two main areas of support: the day's low and the day's high, because we know that these were areas where the market bounced in the previous day. And by the way, guys, I'm looking at SPY. You could use this on any stock, any time frame, but for my purposes, I day trade SPY on a daily basis. So we're going to be looking at the previous day's high and low to be support and resistance. And we can see on the Monday, we open in the range, we test the support, and then that becomes the low of the day where we continue higher. So when you're playing an inside day, it's very important not to get shook out in the middle of the range, because we know it's going to be choppy. It's more important to play off of these pivots, the low and the high. Okay, and I'm going to show you guys some more examples of this later. So now let's move on to the second type of day, which is a gap up. So a gap up is when, like here on Tuesday, where we gap up outside of the previous day's range. So let's draw the previous day's range now. So this would have been the low, and then I'm going to put the high. And as you can see, we gap up outside of that range. So whenever we gap outside of the range, we're expecting there to be a lot of momentum, either in the long direction or the short direction. But we know that the people in the market that traded on this day in the direction of the long are up a lot of money. So we have a psychology effect in play. So if you traded this on Monday and you swing traded this to Tuesday, you would be looking to take some profits. And then that's what we see with the gap up. A lot of times there is a little bit of profit taking where we find a bottom and then we continue in the direction of the gap, because the gap in itself shows power in that specific direction. So if it's a gap up, we show power in the direction of going long. If we gap down, we show power in the direction of going short. And a fun fact for you guys, some testing that I've been doing lately, is the gap fill, which would be yesterday's close, going from the gap up to the gap close is a high probability that we will fill this gap at some point, but there's a very low probability that we will actually break straight through the gap and go down. We will usually find support somewhere at the halfway point or somewhere at the gap fill. And this is what we build our trading strategy for on gap up. We use this thesis to allow us to play that type of day. So how are we going to use the gap up to our advantage? So there's 3 points that we need to know when we have a gap up. So the first thing is we have to draw yesterday's close, because there is a chance that we will fill the gap completely. And if we do fill the gap completely, the gap close will be a major area of support, okay? And if we don't fill the gap completely, what we can do is we take a Fibonacci from the close to the high before we start pulling back at the open of the market. And we can use the 50% retracement, the 618, the 786. We can use all of these Fibonacci levels as areas of support on the way down. And as we can see, as this market pulls back, as the buyers from over here take some profits, we find support at the 382 and the 50% Fibonacci. So what we can do is we can be building a position as we come into these Fibonacci levels. We can be adding shares here, adding shares here, adding shares here, with knowing that our stop loss is going to be right below the close. Or we can be conservative and wait for a pattern to form. So in this case, we have a nice double bottom that forms at the 50% retracement. And then from there, we have our play to continue long. So on a gap up, you want to have your gap close, you want to have the previous day's high, and you want to have your Fibonacci drawn as well as the close itself, with the thesis that we will continue to fill this gap somewhere, maybe the 50, the 618, maybe the full gap, but we will be building a position as we fall into this gap with a stop loss below the close of yesterday. Okay, guys? So that's how we play the gap up. And as we can see, we had a nice double bottom at the 50%. We had a long opportunity. We took the long as far as we can go and made some profits. And one thing I want to point out is this high where the market actually collapsed is not a coincidence. This was Friday's high. So having these support and resistance, these highs and lows of previous days drawn, is very important. Very, very, very important, because they act as pivot points. Okay, so we'll move on to the next type of day. So there's a gap down day. So this is the last type of day. So either we are going to open inside the range, we're going to gap out of the range, or we're going to gap down out of the range as well. So you can see here, if we draw previous day's high and low, so the gap up, this was the high and this was the low. And where do we open on the 24th of June? We open completely outside of this range. And when we open completely outside of this range, there is a favorability to short, because the bulls who had been making profits in the last previous 2 days, now all of a sudden we're gapping down below stop losses. So let's say the stop loss was here on the bulls. And when they wake up in the morning and the market opens, they're already down money. And this is where we can have this trending effect when a certain side gets trapped. And then with that trap, we have a bunch of stop losses being hit. And we can see on this day, we had huge drop in the market. So how do you play a gap down? So with a gap down, what you want to do is have the previous day's high and low drawn. And it's kind of the opposite of a gap fill, a gap up, which you would expect that some part of the gap will be filled in and then we will collapse, which is the opposite of the gap up, where we thought some part of the gap will be filled and then we'll continue up. So it's the same strategy in reverse, essentially. So we could draw our fibs as well. So we could take the close and we can take it to the low before we start pulling back. And we can see the 382 and the 50% area acting as a form of resistance. And then we can take this all the way down. Okay, guys? So that's how you play inside days, gap up, gap down. So you have to have a set of rules that you apply to each one of these type of days. It could be similar to mine. It could be different depending on your strategy, your risk to reward, your trade style. But those are the 3 general days. And those are the way you have to play it. So let me recap real quick. Inside days, we want to look at the previous day's high and low as support and resistance. And we want to play off of those areas for high probability setups. For gap ups, we want to use the close of the previous day looking to fill that gap, or we'll take the Fibonacci levels from the close to the high before we start pulling back, and using these Fibonacci retracements as points of support, looking for chart patterns to take a setup from there. And then on a gap down, again, it's just the opposite of a gap up, where we're looking to fill the gap somewhat. And from there, we're trying to short and follow the trend of the gap. Okay, guys? So I hope that made sense. That's my playbook. Each day, I determine what type of day it's going to be, and then I employ the strategies that I talked to you guys about, and I focus on using my strategies. And when they don't work, I take a stop loss and I walk away. So you have to know what's your statistical advantage, and you have to play towards that and nothing else.